Okay, I think we can start. Assalamu alaikum wa rahmatullah. Thank you everyone for attending our third USH webinar. As you know, USH, Oman Startup Hub, is the platform to connect startups with supporters, events, news, and everything that's happening in the ecosystem. If it's the first time you attend our USH webinar, thank you for coming. Please be sure to visit the website and create a free profile if you don't have one already. Today we have two very exciting speakers. Abdullah Al Shaksy, I'm sure a lot of you know, is the co-founder and CEO of Feiz Ventures, the first private venture capital firm in Oman. He's also the general partner of Spark Labs Energy Accelerator, which is the first energy-focused accelerator program in the Middle East, North Africa region, and a board member of many global technology startups, including some that we all know, Spotlight, eMushrif, Akid, Phasro, and Interface Fluidics. We also have Mahesha, who leads investor relation in Golden Gate Ventures, which is based in Singapore. He joined the firm in 2018, focusing on the development and management of investor relationships and serving the needs of Golden Gate Ventures investors. He also helps the firm in areas of fund formation and fund administration. So welcome. Thank you for joining us, both Mahesha and Abdullah. Abdullah, let's get started with you. Can you tell us a little bit more about Feiz Ventures, what you do, the startups that you work with?
Yeah, thanks for the introduction and thanks for having us. It's great to see everything Arsh is doing in terms of engaging the public and getting them involved in the ecosystem. So Feiz Ventures was founded in early 2018, and we were the first private venture capital firm in Oman, and we created it really because we saw that the economic climate was a really difficult time in around 2015, 2016, and we really wanted to do something about it and realized we needed to create entirely new industries and entirely new companies from thin air with very little resources and very quickly. And I think the only way humankind has come up with to actually do that is basically the venture capital model. So, we got together and we realized we really wanted to do that and wanted to play that part of the ecosystem. And so we created Feiz Ventures, and we focus on early stage investments in technology companies. We've done 7 investments so far. 4 of them are Omani startups, like you mentioned. I'm sure people will know about Akid. Hopefully you're ordering from them daily. eMushrif, Phasro, Karzati. And alongside that, we also launched an interesting partnership with some of the large corporates here and the accelerator program that you mentioned as a way to kind of attract global technology companies to Oman and deploy new technologies in our existing industries as well, and also invest in these startups so that we can benefit from their international exposure and their international growth. So yeah, I mean, that was kind of the backstory and the motivation behind Feiz Ventures.
Great, thank you for that. Mahesha, do you want to talk to us about Golden Gate Ventures in Singapore and the kind of startups that you work with?
Cool. Yeah. Thanks, Abdullah. Thanks, Sarah, as well for the introduction. Thanks for having us here. So yeah, I guess I'll chat a bit more about Golden Gate Ventures. I guess kind of similar beginnings as to what Abdullah just mentioned. So we were one of the first few investors in Southeast Asia. So we started about 10 years ago, launched sometime in 2011. Back then, Southeast Asia, in terms of the tech ecosystem, was really, really young. So we didn't have a lot of investors, a lot of people looking at Southeast Asia as a region to invest. But there were, tech entrepreneurs. There were entrepreneurs building companies back then. Kind of taking example from Silicon Valley, for example. And so that's where we started the firm back in 2011, really with the idea of supporting these entrepreneurs in that early ecosystem. And so that's where we launched our first fund in 2012, really to do, kind of seed investments into a very early ecosystem in Southeast Asia. And then, fast forward a few years to 2015, a few things that happened. Singapore, where we're located, started putting in a lot more money, resources into the tech ecosystem here in Singapore. And so that's where, as part of a program, one of our first institutional investors, Temasek, which is Singapore's sovereign wealth fund, they anchored our second fund in 2015. So it was Temasek and Eduardo Sabrin, one of the co-founders of Facebook, that anchored our second fund in 2015. Doing similar investments as our first fund, but slightly later stage, or slightly more mature companies. So where the first fund was more of a seed kind of fund, fund 2 was more of a seed and Series A mix fund. And then in fund 3, we launched our third fund, and that's same thesis as fund 1 and 2, doing a bit more Series A funds. And for us, the thesis for Southeast Asia since day one has pretty much been the same, and that is, you've got a few demographic, macro kind of trends in Southeast Asia. So one, it's a very young population here in Southeast Asia. You've got a growing GDP per capita, growing middle class, so growing spending power, and a lot of that spending power coming online. And so that has been the thesis since day one. So broadly speaking, in terms of our investments, we kind of focus on that rising consumer class in Southeast Asia. So, it could be a B2C kind of business, whether it's ride-hailing, food delivery. It could also be a B2B business that taps on that rising consumer spending online. So for example, where you are making purchases on an e-commerce site, there are tech-enabled logistics providers that support and that help to fulfill all of these deliveries. And so we look at both of these kinds of companies, as long as it sort of rides on that growing consumer trend. So that's what we've been up to at Golden Gate over the past couple of years. Moving forward, we are in the process of launching a slightly later stage fund, so Series B plus fund. And so again, we've kind of grown with the ecosystem. So where the ecosystem has matured into, from really seed stage investments to Series A, where there are a lot more Series B and later opportunities right now. And so that's where we are in the process of launching a fund for that.
That's very interesting. Mahesha, I have a question for you about the Southeast Asia ecosystem. For us in Oman, it's quite a different landscape. We focus more locally for now. Can you tell us a little bit more about the different countries, and are there overlaps, you being in Singapore? How do you manage the different geographies that you invest in?
Yeah, sure. So Southeast Asia as a region is made up of I think it's 10 or 11 individual countries. So very different populations, very different political situations in each country. Broadly speaking, where we have invested most of our dollars in has been in Singapore, Indonesia, and in the past, I'd say a year or so has been Vietnam as well. And so for kind of three very varying reasons why we've invested in these regions, these countries. So Singapore just, historically has been the financial hub of Southeast Asia, some say Asia as well. So it has a few things. So it has, educated workforce. It has global movement of capital. There are a lot of investors investing into Singapore, whether it's tech or otherwise. And so that's where in the earlier days, like I said, there has been a lot of money coming from government, coming from various international investors looking at Singapore as a region. And so that's where there has been a pretty diverse ecosystem built up over the years. Indonesia is the largest country by population in Southeast Asia. So, by population, they're nearly half of Southeast Asia. And so, by default, that is essentially just the largest market here. So where you are building a company in Indonesia, you can sort of survive without going regional. When you are building a company in Singapore, you tend to need to go regional just because Singapore is so small. So that's where Indonesia has seen a very quick and rapid development of the ecosystem in the past 6 or 7 years. And then finally, Vietnam in the past 1 or 2 years, it has sort of picked up in that time, primarily because, well, I wouldn't say primarily. I think Vietnam has always been an interesting ecosystem. They've always had a lot of tech talent there. What's changed in the past one to 1.5 years is really the geopolitical situation with, for example, the US-China trade wars. So where that trade war has been happening for a while now, there have been a lot of companies globally, so global manufacturing companies that have moved manufacturing to Vietnam, both because of trade wars, because of cost. Vietnam is, in terms of cost, is a cheaper place to manufacture than China these days as well. So for example, Samsung has moved, I think, more than 50% of its smartphone manufacturing to Vietnam now. And so that sort of just fueled a lot more international investment into the country. It's fueled people's spending power increasing as well. And that's where we've seen the ecosystem really take off as well, where people have that spending power and are looking to spend online. And in some ways kind of accelerated in the past 6 months with COVID and the lockdowns and such.
Thank you. Yeah, that's fascinating. Abdullah, can you tell us a little bit, with the different startups that you've invested in, both in Oman and internationally, how you navigate the different geographies and how you find the Oman-based startups versus the international ones?
Yeah, sure. I'll start, I guess, with the international ones. Most of what we're looking for internationally is through the Accelerator program, which is a partnership between us and Petroleum Development Oman, and now a few other corporates also joining on board into that partnership. So what we do there is we kind of try to look for technologies that are going to be kind of instrumental strategically to them, or give them some sort of incremental saving or new business lines to them. And we actually kind of accelerate them. We pilot and deploy those technologies here in Oman with the corporates, and then we look at potential investments into the successful technologies, basically. What we do with Oman startups is very different because the ecosystem here is still quite young. In general, if you look at the bell curve of where everybody is in the ecosystem in terms of stage right now, I would say the majority of them are at about pre-seed or seed stage. And so we actually look at stuff that's earlier. We get way more involved. We're very active in terms of working with other incubators such as National Business Center or SAS or any of the other business centers, and sourcing interesting deal flow from there. We also participate in a lot of these pitch battles. We participate in a lot of the hackathons. We also have a growing involvement in kind of the education space, especially as it relates to software development and kind of upskilling tech talent. And using that also as kind of a feed source for very early stage deal flow. So yeah, it's a very different dynamic because the companies are a lot earlier stage, and I think it requires a lot more active, kind of active searching for them. But obviously, you know, there's only 3 venture capital firms in Oman, so for the most part, it's very easy for people to approach us, generally speaking. So we do also have, Oman-wise, we have a lot of inbound companies, and that's how we find them. And so, yeah, it's very, very different than how we would look for things internationally, where it's a lot more kind of research-based and a lot less hands-on, basically. And that's just a function of the stage of these companies that we're dealing with. So we're typically sourcing earlier stage startups from Oman because that's where most of the startups are. I mean, in our portfolio, though, I would say basically our Oman startups right now, the 4 that we are invested in, are around the Series A stage. So there's probably some of the more mature startups in Oman right now, you know, between, you know, Akid and Karzati and Imashraf, Fezro. So, but we're still kind of hunting earlier stage stuff than them, and we hope we can announce a couple of more deals by the end of the year that we're working on. So, yeah, it's different, but we also kind of bring a lot of what we learn from our sourcing globally, especially as it relates to kind of trends and market insights and what we're seeing globally happening and what's working and what's not working globally. And that also kind of instructs how we source locally.
Okay, great, and good luck with the new investments. We'll be looking out for that news. So if anyone has questions, there's a chat function at the bottom of the screen. Please, we're already getting a couple of questions. Either we'll put it to the speakers to answer or we'll type them quickly. But while you were registering, we did gather some questions already. So we're just going to try and make sure that all those questions are answered, but please keep your questions coming. So what we're talking about today is international investment. So like you said, Abdullah, startups in Oman are fairly early stage, but some of them do have international investors. And we really wanted to get into that and how you know when your startup is ready for international investment or how you even approach international investors. So I think the first question that would be relevant here for both of you, why is international investment important for startups? Mahesha, since you at Golden Gate invest kind of cross borders, we can start with you for that.
Yeah, sure. Yeah, so I guess the first question, you know, is so the question was, why is it important? I guess the first question should be, is it important? Is international investment important, or you know, is investment into a startup even important? You know, if you think about it, for you as a founder, when you bring on investors into your cap table, you have to give up something. You have to give up part of your company that you may have spent time working on. So, you know, if you are giving up something, what do you expect to get in return? Not that, you know, it should be purely transactional, but, you know, you should think about what an investor, international or otherwise, can bring to the table. And like, I do have friends running companies as well, and they always talk about raising money from VCs or from investors. But then, you know, for certain kind of business models, maybe it doesn't make sense to bring on a VC investor. You know, VC investors, you know, kind of chase high growth deals, and then, you know, chase a kind of like a big exit at the end. But for certain kind of businesses, that doesn't make sense. So yeah, going back to why would you bring on an investor? You know, investors bring a few things. Obviously, capital, financial capital, but also the experience that the partners of the fund have, whether it's running your own companies, whether it's investing in companies, whether it's advising companies. So I think there's a question that you'd have to ask when you are going to bring on investors onto your cap table. And specifically, I guess for international investors, then what additional thing on top of those two things I just mentioned can they bring? And so most companies kind of look for their experience in a certain market where that investor is based. So, if you're at a stage where you are looking to expand regionally, globally, then can that international investor help you with that expansion? So whether it's opening up doors in country, with the government, with corporates there, with various people in country, can that investor bring that kind of value? So I think when you are considering international investment, you should consider what additional value an investor like that can bring to you.
Yeah, that's fair, and that's similar to what you were saying.
Yeah, I would just add, just kind of to dovetail off that. I mean, it's the same as when we invest internationally. We have investments in France and US and Canada, and those are all very mature, or relative to our ecosystems, they are very mature ecosystems with plenty of options in terms of funding. But what we brought to the table is a unique knowledge about our ecosystem and our geography, our politics, our the challenges of doing business here and the advantages of doing business here. And so we bring that to the table that they couldn't get from having an additional local investor. And as Mahesha said, bringing on an investor always means if you're just looking at it transactionally, you are selling a part of your company. So you're not doing that, you're doing that because you need something out of it. You need the equity, you need the capital to grow. And on the other hand, also you need the experience and the exposure that those investors can bring. And so when you're talking about international investors, that usually means experience outside of your experience, geographically, or maybe they're in a new region, or they have, in our case, where we work very closely with particular industries like the logistics sector. And
I think you are frozen, Abdullah. We've lost you. Okay, Mahesha will go on to the next question. I'm sure Abdullah will join us in a bit. Do you feel like there's something startups can do to target specific markets? For example, if the startups were approaching you because they wanted to enter the Singapore market, is that something that you find often? And when do you feel that a startup is ready to do that?
Yeah. So I think sort of going back to what I talked about earlier, as to the reason why a company would want to attract an international investor. So I think it really has to do. So for us, for someone who's not based in Oman, we don't really have any investments in that region. It really comes down to why is that particular company looking to expand to our region? What kind of similarities, what kind of value add can they bring to this region, and then what kind of value add can we bring to help them in their expansion. So I think it has to be for us a very clear reason why right now is the right time to expand internationally, one, and number two, why specifically Singapore, why specifically Southeast Asia, or any country in this region. So I think having that very clear vision, that clear proposition is pretty important for us, where we are looking for companies or looking at companies not from this region that are looking to expand into this region.
Abdullah, do you find that, sorry, we lost you earlier. Do you find that as well, that you, when you're targeting international startups, that they have to really bring value back to Oman and vice versa, that you can really add value to them from the Oman perspective?
Yeah, absolutely. I mean, if you want to go like even kind of a level deeper for the founders who are on the call, you know, we're also kind of, you know, as an international investor, we always see ourselves as secondary to local investors. And so the first question that's going to pop in our mind is, especially if you're coming from a developed ecosystem, which has a lot of local investors, the first question that's going to come to mind is, why us? Like, why are you approaching us? And if we are approaching you, obviously we already have the answer to that question. It could be that you're very suited for our market, you just don't know it yet. But if they're approaching us, we're definitely, the first question is going to be, well, why us? Why not local investors? Why Oman, or why the region? Why not another region? And so it has to be synergistic. It's not just going to be transactional the way we're going to look at it. Because if it is transactional, that then we then ask the question, you know, again, why is this just transactional? If it's just capital that you need, there's a lot of sources, I'm assuming, if you're based in US or Europe, and probably the answer to that is because they've struggled to raise locally. So when you flip that to a country like Oman, where there's only 3 VCs, that kind of philosophy breaks down a little bit, because where we stand today in the ecosystem, there's very few people who can fund companies at the stages that we fund. So again, to bring back this, you know, the examples of like Karzati or Mushrif or Akid. So what ends up happening is we're kind of prematurely sending them off into the wilderness and expecting them to raise internationally, which thankfully these guys have managed to do, and I'll explain their stories a bit more for the audience here, especially the local founders in the audience. But typically you're not doing that early in your journey. It's probably a bit later in your journey when you've secured your local market and you've established enough kind of a base and a market share in your local market, and then you're like, okay, now I want to expand to a new market, or I want to expand to a new vertical where I need an international investor who has that particular knowledge base. And, you know, that's the right reasons and the right time to do it. Because as I said, on the other side of that equation, if you're not doing it for those reasons and you're not doing it at that time, international investors are going to ask, why not? Like, why? So why are you approaching me? And obviously the assumption is going to be a negative assumption unless you can answer with a positive reason of why you want to do that. And I mean, to get into the stories of, okay, well, how did a company like Karzati get away with it? Or how did a company like Mushrif get away with it? I think that model a little bit today in today's ecosystem, and I think we're learning and we're growing, and hopefully we will solve this over time. But today, you know, they went out and they raised, in Mushrif's example, in their seed round, you know, they had investors from outside of Oman. And, you know, in Karzati, similarly, they had seed investors from outside of Oman. And really, in their particular cases, they kind of pitched this in a different way than they typically would. They said, hey, you international investor, you know that in your international market, this model is wildly successful. Like, let's talk about the Karzati model. Karzati model is probably closest to, you know, there's a public company called, oh my God, I'm blanking on the name. I think Carvana. And it's a US-based public company, and mega, you know, well, a very large market cap in the hundreds of millions, if not billions. I haven't checked it in a while. And so you, international investor, know that this model works in your markets. It's been wildly successful, and you missed the boat. Here's a chance to catch the boat in a new market that's untapped, that's very few competitors in this market. And it's a kind of different reason to present, a different way and a different reason that you're going to international markets. And then you're saying, you know, eventually I could be an acquisition target in your market, and you could help me with that. Or I could be raising to expand into your market in the future, even if it's not now, and you could help me with that. And so that works. You know, in Mushrif's case, you know, they did actually expand outside of Oman quite rapidly. So it helped them do that. And so I think you need to kind of be a little bit creative here in Oman, because you're going to find yourself talking to international investors a lot sooner than if you were in a different market where there's a lot of local funding available, and you would be having that conversation later. And at that point in time, it's very easy to say, yeah, I'm raising funds because I'm expanding to your market. But as a seed stage company, that doesn't make sense, because you haven't even secured your market yet. You need to get, you know, you need to be number one in your market before you start talking about expanding into my market. So yeah, I mean, those are some of the experiences we've had. And I don't know, maybe Mahesha, the perspectives that you would bring is kind of from the other side of the table. What would drive you, you know, to, what would catch, you know, you know, what would catch your eye or your firm's eye coming out of Oman?
Yeah, so I think when you talked earlier about, you know, us knowing a particular business model in a different region. So, you know, we've invested into a particular business model in Southeast Asia. We know that's done well here. We know, you know, what kind of, you know, drives it to do well in Southeast Asia, and we're seeing very similar kind of trends, demographics in Oman. We see a company there. I think that would be, you know, one instance where we would consider an investment into a region that's, you know, sort of outside our typical geographic mandate. So that's one. And then I think, you know, in terms of further down the line as well, were a company from Southeast Asia to expand into Oman, then like what you said, that could also be a potential acquisition target for one of our companies. So again, you know, even if we're not direct investors into the company from our fund, one thing that, you know, we do with a lot of our portfolios is also to help them expand into the region, whether that's, you know, via acquisition, whether that's via hiring local talent in that region. So yeah, so I think, you know, there could be quite a few ways where we would look at companies in the new region.
Great, thank you. We have a couple of questions from the audience that I just wanted to bring up. What kind of hurdles could you face as investors going international? I mean, this is specific to Omani-based companies, so I guess that's for you, Abdullah. But for both of you, legally, do you face any hurdles trying to invest across borders?
So for Omani startups, it is quite challenging right now, but I think we've kind of consolidated around a few ideas of how we like to do things now, since we've had companies that have gotten to the scale where they've, you know, successfully raised capital outside. And usually I would advise, if you're just getting started, not to worry too much about that, and just kind of be simple, keep it simple, focus on, you know, being lean and being fast, and just starting in local CR and keeping it really simple, because you can always restructure later. And that's what your investors are probably going to ask you to do at the right time, at the right moment, when you're big enough and it makes sense to do that. You know, there's a lot of best practices that international investors are going to expect anyway. So it's best to kind of get to the point where you can do the best practices right. And in terms of our local commercial law, things like different classes of shares and different voting rights and ESOP and all these jargon things that are you're not thinking about on day one, you're going to need them on day 600. And the easiest way to do that is just restructure at that point when you need it, when the time is right, when you're bringing on those investors. They're going to have lawyers involved in the deal, and they'll probably advise you of how they want to see it. But from what we've seen, the kind of it's slowly developing into the Omani standard is, starts with your local CR and then raise convertible notes in your early rounds. And once you're ready to bring on institutional investors like VC firms or international investors, then set up a holding company in a jurisdiction that allows you to implement all of the best practices, like different classes of shares, employee stock options, and all of these other things. So you can go to BVI, or if you want to keep it within the region, you can go to Abu Dhabi, has a free zone called ADGM. So there's a lot of options in terms of where you can go at that point in time. But don't try and get ahead of yourself, especially if you're a very early stage startup, and try to set up a very complicated structure, because it's going to be costly and it's going to slow you down. And it's not necessary. It's not necessary on day one. It's not necessary on day 300. This is this is only going to come into effect when you're talking to a VC or an institutional investor. For your angel investors, I think stick to a local setup and maybe do convertible notes. Those two are very easy solutions. And when it comes to convertible notes, stick to two types. In fact, I'll narrow it down, even one. Look up Safe Note, SAFE. Don't do anything else. Like, just stick with that, and all the investors are going to understand exactly what it is. So you're not going to taint your cap table, or your ownership structure won't be complicated, and later on investors are going to be like, hey, what the heck did you do with your early investors? So use standard investment instruments so that everybody later on can look at them and understand them perfectly.
That's great. I mean, we're familiar with the Safe Note, so we'll be sure to include it in our little one-pager that we'll send to everyone, so that everyone will have that as well. Mahesha, do you want to add anything to that?
No, nothing specific. Definitely do agree. It's definitely not something you should really think about in the, on day one for sure. It is something to think about when you are going to attract international investors. What I'd say is that also, just, I guess, sort of be aware that there may need to be some kind of restructuring, and even the choice of jurisdiction when you do eventually restructure would also kind of depend on what kind of investors you want to bring in. So, if you try and look for investors from the US, certain kinds of companies incorporated in the US, for example, are preferable to them for tax reasons. If it's an European investor, there are certain jurisdictions that European investors kind of don't want to invest in because it's on a EU blacklist or something, for example. So just sort of be aware that there are these considerations. Most of the time, they will come up in your conversations with VCs. VCs at the Series A kind of stage will help you restructure that. Something that we kind of do a lot as well, where Singapore tends to be the place where most companies should be incorporated. We do help companies restructure from an Indonesian company, for example, to a Singapore holdco. So yeah.
So it sounds like regardless of geography, there are kind of overlaps of when you're ready to do that. There's certain steps that you'll need to take, like restructuring, but don't panic. You can do it as and when is necessary. There was someone who had their hand up. Do you have a question, Abdullah? would you like to speak? We can unmute you so that you can ask your question live. If you do have a question, just click the raise hand button again and we will unmute you so you can ask your question.
Oh, did I have my hand up?
Not Abdullah, you, Abdullah in the audience.
In the audience.
Another
Okay.
Abdullah, yeah.
Okay.
One of the other questions that we had gotten while during registration is, how is Oman as a geography when you speak to both international startups and vice versa? How is Oman as a geography if you are the startup speaking to international investors? Abdullah, you can start with that. And Mahesha, I know Golden Gate doesn't have investments in Oman, but you can kind of, I mean, you're fairly familiar with us. You can kind of give us your thoughts on how you feel about that.
Yeah, I guess so. For startups in Oman who are talking to international investors, I think international investors are quite interested in the market here, and once they get to know the story and they see it as kind of a market that is a good starting point for the region, mainly because stable government, you know, good local population that's, you know, quite a lot of local talent, so we don't have to import as much talent, you know, and actually the fact that it's a kind of white slate or clean slate where a startup can kind of, you know, easily enter into the market from a competitive perspective, not have so many competitors, establish you know, a decent amount of market share, and then move into markets like Saudi or Kuwait or Qatar quite freely. So I think those are some of the parts that are attractive. I think some of the parts that are less attractive is that, you know, we haven't had, you know, we're only a few years into this whole ecosystem. I would say about 3 to 4 years into this whole ecosystem. So, you know, we haven't had enough time to have any big high profile exits or big high profile companies that have gone public or expanded, you know, outside of the region. And so, you know, there's no kind of precedent that local startups can point to, or when they speak to those international investors. But from my experience of co-investing alongside these international investors, I think the ones that understand Oman and know Oman understand its advantages, and they kind of understand that it's actually a much easier competitive landscape for you to start in Oman and then go to Saudi than to start in UAE and go to Saudi. And it's a bit counterintuitive, because you're kind of going to think like Karzati started in Oman and then went to UAE, and they easily could have done that the other way around. I mean, both the founders are, you know, international citizens, you could say, and can easily have started the same thing in UAE. So, but by starting here, they had basically very little to no competitors, and they could kind of figure out that product market fit, develop their model, figure out how they want to do things before they go into, like, you know, the Shark Tank basically. And so the investors that know Oman and understand that part of it will overlook the fact that, you know, it's a very young ecosystem and we haven't had a lot of precedent of large exits or high profile companies, you know, being acquired or going public or anything like that. But I think that's going to come with time, and that will solve itself. But hopefully what will stay is that Oman is quite an interesting place to start if you're trying to get into the region. You know, Saudi is a big market, but it's a bit opaque compared to Oman. Oman is like much more transparent and much easier to understand. And so, you know, that we can play those things to our advantage. And as a founder, you should kind of play those things to your advantage when you're raising money internationally. And when we look at startups outside of Oman, I think they love how exotic Oman is. So many founders I talk to are just like, yeah, just give me an excuse to be in Oman. Like, whatever it is, like, get me a client so that I can fly out there and chill with you guys. Basically, you guys are amazing. So it's funny. Use whatever it is that is your advantage. Use it. And if the advantage is it's a great place to be, you know, it's
founders are adventurous. Where they're a different breed than the suit and tie breed. They're not the Dubai breed. They don't want to be in a city. They want to be out there and in a interesting place with interesting people. It's exotic, it's new, it's different, and they love that, and they absolutely love that. So use it if it works, use it.
That's good to know. Attract them with the mountains and the desert, right? Mahesha.
And the turtles and the whale sharks and the Maniat Islands. We've got a whole like spiel. We got it down to a very accurate pitch. We should send our pitch to the tourism guys. I think they'll start using it.
Mahesha, do you have any thoughts on this?
Yeah, I feel like I should, try and find a chance to make a trip down there as well.
He's very effective.
Yeah. Yeah, I mean, I think, as VCs, we want to invest in potential, not just the founders and the company's business models. We want to invest in the potential of a region. So in fact, I was talking to my dad this past weekend. I was telling him, I was doing this panel, and he was like, he used to work in the telco here in Singapore, and he's like, Singapore and Oman have had a pretty long history of bilateral relations. Both kind of similar country size in terms of population. I guess kind of similar GDP per capita, spending power, stuff like that. So he was like, that makes a lot of sense. And I think what IDEO, OSH have been doing in the past couple of years, it's been really interesting to kind of build that ecosystem. I think for us at Golden Gate, especially more so in the early days when we were, some of the first few investors here, part of our job was also to build that ecosystem. So as a VC, running those hackathons, running those founders pitch nights, connecting various people from the different, corporates, companies, investors, angel investors, and all that. That ecosystem building was a big part of what we did as well back then. So I think it is very exciting to see what's going on in Oman right now, and yeah, definitely looking forward to keeping tabs on what's going on.
Yeah, and just to dovetail off that, the ecosystem building, I mean, as just an anecdote, when we started Feiz Ventures and we knew that we were starting at zero, and they were at the time that we started at the time that we conceived of Feiz Ventures, actually OTF and IDEO still hadn't been established. So we actually conceived the three funds roughly at around the same time. We were the last to launch. And we knew that was going to be the journey we were going through. And so we wanted to put together kind of a group of advisors that had kind of gone through similar journeys in other ecosystems and hear their stories and how they did it. Because I think it's easy as a person or as a country to kind of feel isolated, and that all the problems that you're experiencing, you're the only person experiencing these problems. And you kind of need to get yourself out of that mindset and realize that there are other people who have gone through this. There are other people who are, almost excited by the challenge that you have ahead of you and would love to come and help and give their experience and tell you how they did it. And these models have, worked, and it takes time, it takes effort. And the best anecdote I have about that is one of our advisors was very involved in the early stage ecosystem as it was being established in South Korea, which only was about maybe 10 years ago or less, I would even say, from a VC perspective. And so, in my first meeting with him, I had dinner with him, and I went to the dinner already thinking, no way is this guy gonna get where we are in Oman. And this was in Oman. I had this dinner, he was in Oman, and I was already telling myself, he's coming in from South Korea. Yeah, I'm thinking Samsung and Hyundai and all these big, technology companies. He will not relate with what's going on here. And then he told me the first story of their first demo day and how he had to go to the streets to literally like get people off the streets to come and hear these pitches of startups. They're like, hey, there's this event, startups, come, just come in, just to fill one room. He had to physically go to, and let me put it into perspective. This person's like a former board member of Siri. And I mean, a very big hitter, and he's on the streets trying to convince people to come to this demo day of startups. And I obviously at that moment, I'm like, this guy has to be on our advisory board. But also it kind of reminded me that the problems that we're having are not unique. We're not alone. Everyone has to go through this journey. It's painful, it's hard at the beginning, and we have to see it through. That's the kind of most important message that I would say, especially to myself and to the other people who are kind of out there building out this infrastructure right now, is you have to see it through. It took them 10 years. And Mahesha, I know you'll speak to the Singapore thing, it took time, took a lot of time. And there's still a long way to go. I mean, there's always a long way to go.
I mean, that's true. And I think we've come a long way as Oman already, like the 4 startups that you mentioned in your portfolio already having international investment, expanding regionally. So we'll get there slowly but surely. I think we have a couple of minutes. If anyone has questions, please do type them. I just have one more question that we gathered previously about, as in being an international investor, how do you deal with the local investors already on their books? And is it important to have that, to make sure that you have really strong local investors before you seek international ones? Mahesha, you can take that one first.
Yeah, cool. Sorry, could you repeat that question? I think there's a bit of background noise either on my side or your side.
I was asking international versus local investors on the books of a startup. How do you deal with the local investors that are already invested in the startup? And is it important to have really strong local investment first before you have the international investors?
Yeah, I think Abdullah kind of, touched upon it slightly earlier. I think for us, as an international investor, with not a lot of operations investments into a new region, we definitely look to partner with local investors. Ultimately, it is good signaling, where you have very strong local investors on your cap table. It's good signaling for an international investor that you have strong backers that believe in the founders, believe in the business model, that know the market, that know that this is the right product for the market. And then the question is, what do we as an international investor bring to the table? As much as you want as much as a founder is pitching to a VC, in some cases, the VC should be on its toes as well. The VC has to kind of pitch and show its value to the founders. And so for us internally, when we are looking at a investment into a new region, it is about what can we bring to the table vis-a-vis what the current local investors already bring. And so yeah, so we definitely look for a strong local investor base in the cap table.
Yeah, same when we're investing internationally, we were really interested to see that they put together a good, for example, when we invested in France, and one of the things that really drove us to invest in these guys is basically all of their angel investors were people from the industry. And so they had basically collected really experienced people from their industry, from their specific vertical, and convince them to invest in this company. And that's a great endorsement. And so like, if let's say you're a money startup, maybe get angel investors who really understand your industry. Don't just get anybody, because, you know, again, these are social signaling things. You know, it demonstrates that, you know, you've managed to convince a set of your peers that are supposedly just as knowledgeable about the sector as you are. It also shows that, you know, you're being selective about who you're getting as investors, which again shows that this is kind of, you know, you're not just getting whatever you can take. You have enough choice that you can have a list of investors that are all impressive. Yeah, I guess it's very similar points to what Mahesha said.
This will be the last question before we wrap up. Someone from the audience is asking that international investors may view certain ecosystems with a limited lens. So what can founders do to educate the international investor? And examples of that would be Oman or African startups, you know, an ecosystem that's a little less known to big international investors. Do you want to start with that, Abdullah?
It's difficult. I would, this is a slight tangent, but I just finished reading The Hard Thing About Hard Things. It's a great book. And that's what comes to mind when you say how to convince someone who has a limited lens. It's difficult. Like, the short answer is difficult. Don't worry about it. Don't worry about convincing anybody. Just worry about, you know, delivering the results. Like, you know, focus on building a valuable business and investors will come. Like, that is universally true. So if you kind of focused, it's a trap. That question is a trap. Like, it's very difficult. So don't actually address it. Let your work address it. Like, let your performance address it. Like, show the things that I'm saying. Show that Oman is a place with limited competitors. Grow really big. Get to like 90% market share in a year. You're saying it, but if you do it and you show it, that's all you need to do. And it may or may not work. It's not, you know, you can't take these things for granted, because yes, changing people's minds is a difficult thing, but I think these are the kind of problems that are a trap. They're difficult problems that you kind of want to go and directly address it. And you say, maybe we should do this big communications campaign, or maybe we should invite them here. Or, those are good. Like, I'm not saying don't do them, but you know what's even better is just like, go build a business that everyone wants to invest in. And the Omani startups have done that. Like, our Omani portfolio is on par with our international portfolio. In fact, they're, you know, they've all been founded, I think, within the last 4 years, and, you know, are collectively generating $30-40 million of revenue annualized. So make no mistake, they are doing that. They are proving the things that I was saying earlier. They're not just saying those things, because it's hard to just try and convince people without, you know, it's like, I'll believe it when I see it.
Mahesha, do you have anything to add before we wrap up?
Yeah, I definitely agree. It is difficult. Focus on the company, focus on product, building that out. I think also one thing to add is that, you know, when you do approach investors, there are many kinds of investors you can approach. You know, you've got angel investors globally, you've got corporates globally, you've got VC funds globally. So kind of think about what each of these investor profiles look out for. So for a corporate, maybe it's more of a strategic thing. For a VC, you know, it's definitely more of a financial return that they're looking for. And then tailor your story, not just about the company, but about Oman as a region to that type of investor. So, you know, even for us fundraising for our funds, a big part of it is also about selling Southeast Asia. Even though Southeast Asia as a region has been around for 10 years, for a lot of investors, you know, in the US, Europe even, it is a very, very new market. And so we do spend a lot of time selling Southeast Asia as a region. And we sell it differently to different kinds of investors, institutions, foundations, corporate investors. So yeah, I guess the point is to kind of tailor your pitch about the company, the region to that investor profile, and you know, really sort of give them what they are looking for.
Great. Well, thank you very much, both of you, for your stories and your experiences and all the valuable advice and tips you're giving to the founders. This session is recorded. We will be uploading it on YouTube, and we'll be sure to send the link to everyone who registered, as well as producing a one-pager summary, which will be available on request. So if you'd like it, please do send us an email, and we will be sure to share that with you. If you don't already have an account on Ush, please do create one, and we'll see you at the next webinar. Thank you, Abdullah. Thank you, Mahesha. And thank you, everyone.
Thanks.
Bye.
Thanks, everyone. Have a good night.